It's important to understand the performance of gold and silver in the precious metals market in order to make informed investment decisions. Recently, the market has seen a sell-off of both gold and silver, as well as associated mining stocks. This may have caught some investors off guard, as many expected these metals to perform better. However, there are a few reasons for this sell-off that are worth exploring. One of the biggest reasons for the recent sell-off is the Federal Reserve's rate hiking cycle. As the Fed raises interest rates, it can have a negative impact on the performance of stocks and bonds. This is because higher rates make borrowing more expensive, which can slow down economic growth and lead to a decrease in demand for these assets. This has also affected the precious metals market, as investors have been selling off their holdings in gold and silver. Another reason for the sell-off is the stronger dollar. As the dollar becomes stronger, it takes less dollars to buy precious metals. This means that the price of gold and silver decreases, leading to a sell-off in the market. This has been compounded by the fact that the dollar has been bought up as a safe haven, as investors seek out assets that will hold their value during times of economic uncertainty. Despite the recent sell-off, there is still a positive outlook for both gold and silver in the future. Gold has held up relatively well compared to silver, as it is often seen as the go-to asset for investors seeking a safe haven during times of economic uncertainty. Additionally, silver has a history of performing well in similar market environments to the current one. As Ross Beatty, in the foreword for the book, points out, we are in exactly the kind of environment when silver tends to perform very well. It's important for investors to take a long-term view when considering investments in the precious metals market. While the recent sell-off may be concerning, it's important to look at the bigger picture and understand the current market conditions. The setup that we have right now is actually favorable for precious metals, and investors who understand this will be better positioned to capitalize on the potential upside. Another important factor to consider is the Federal Reserve's stance on interest rates. The Fed is currently in a difficult position, as they are aware that they should be raising rates to fight inflation, which is currently at 9.1% in the US and 8.1% in Canada. However, with government, business, and consumer debt at record highs, the Fed knows that raising rates would have negative consequences. This has led to the Fed being trapped in a situation where they are unable to properly fight inflation. In conclusion, while the recent sell-off in the precious metals market may be concerning, it's important to understand the reasons behind it and take a long-term view. The current market conditions are actually favorable for precious metals, and investors who understand this will be better positioned to capitalize on the potential upside. Additionally, it's important to note that while the recent sell-off in the precious metals market may be concerning for some investors, it's important to remember that the precious metals market can be volatile in the short term. However, over the long term, gold and silver have historically been good store of value and a hedge against inflation. Furthermore, it's important to understand that the current market conditions, including the Federal Reserve's rate hiking cycle and the stronger dollar, are not necessarily negative for the precious metals market. As mentioned earlier, gold has held up relatively well compared to silver during this period, and there is a positive outlook for both metals and associated mining stocks in the future. Additionally, investors should also consider the potential impact of other global economic factors on the precious metals market. For example, geopolitical tensions, natural disasters, and other unforeseen events can also affect the demand and price of precious metals. Investors should also consider the potential impact of technological advancements on the mining industry. The mining industry is constantly evolving, and advancements in technology can increase the efficiency and lower the costs of mining precious metals. This can have a positive impact on the mining companies and in turn, on the price of precious metals. When considering an investment in the precious metals market, it's important for investors to do their own research and seek out professional advice. It's important to understand the risks and potential rewards of investing in gold and silver, and to diversify your investment portfolio. It's also worth noting that investing in physical gold and silver can be difficult for some investors, as it requires storage and It's also worth noting that investing in physical gold and silver can be difficult for some investors, as it requires storage and insurance. An alternative option for investors could be to invest in gold and silver exchange-traded funds, ETFs, or mining stocks. These options provide exposure to the precious metals market without the need for storage and insurance. It's important to keep in mind that any investment comes with risks, and it's important to carefully assess your own risk tolerance and investment goals before making a decision. It's also important to keep in mind that past performance is not necessarily indicative of future performance. Overall, the precious metals market can be volatile in the short term, but over the long term, gold and silver have historically been a good store of value and a hedge against inflation. The recent sell-off in the market should not be seen as a negative, but rather as an opportunity for investors to consider the current market conditions and potential future outlook. It's important to keep in mind that the Federal Reserve's rate hiking cycle, the stronger dollar, and other global economic factors will continue to impact the precious metals market. Investors should consider these factors and do their own research before making any investment decisions. Additionally, the mining industry is constantly evolving, and advancements in technology can have a positive impact on the mining companies and in turn, on the price of precious metals. This is something that investors should also consider when assessing the potential future outlook for the precious metals market. In conclusion, the precious metals market can be volatile in the short term, but over the long term, gold and silver have historically been a good store of value and a hedge against inflation. The recent sell-off in the market should not. As we dive deeper into the current state of the metal market, it's important to focus on the derivatives market for silver and gold. This market plays a crucial role in determining the price of these metals, as it allows investors to trade contracts based on the future price of the metals. In recent times, there has been a sell-off in metals, but it's important to note that they have not dropped as much as other markets such as stocks and bonds. This can be attributed to the fact that precious metals are considered to be a safe haven asset during times of economic uncertainty. Furthermore, it's worth noting that the perspective of bullion banks versus money managers has changed in recent times. Bullion banks, who were previously net short in silver, have now become net long for the first time in a long time. This is seen as a bullish sign for the market, as it suggests that the banks are expecting a reversal in the market. Additionally, the bullion banks are also dropping their shorts in gold quickly. This is another sign that the market is expecting a reversal and that this is a bullish sign for the silver and gold market in the long term. It's important to keep in mind that the derivatives market for precious metals is complex and can be influenced by a wide range of factors. However, the recent changes in the market as observed by the change in positions of bullion banks suggests that the market is expecting a reversal and that this is a bullish sign for the silver and gold market in the long term. Investors should also be aware that while the current state of the market may be favorable for precious metals, it's important to be aware of the potential risks involved in investing in the derivatives market. This includes the risk of counterparty default and the potential for large price swings. In conclusion, the current state of the metal market, specifically focusing on the derivatives market for silver and gold, is showing signs of a potential reversal. The recent changes in the market as observed by the change in positions of bullion banks suggests that the market is expecting a reversal and that this is a bullish sign for the silver and gold market in the long term. However, as with any investment, it's important to carefully assess the potential risks and rewards before making a decision. Another important aspect to consider in the precious metals market is the role of central banks. Central banks hold large reserves of gold and silver, and their buying and selling activity can have a significant impact on the market. Recently, we have seen an increase in central banks purchasing gold, which is a bullish sign for the market. Additionally, the ongoing low interest rates and quantitative easing measures implemented by central banks globally have also had an impact on the precious metals market.